Good morning. I am recording this the day after the 11th of January 2021. And happy birthday, Sonny. When I prepare for a trading day, my preparation falls into two categories. What's going on in the markets, head and shoulder patterns, wedges, you name it. And also what's going on in my head. So let me just go through these two one by one. I get a sense of the market by looking at what's going on in the stock indices while I have been asleep. So what's going on in the Hang Seng, what's going on in the Nikkei, what's going on in China, Malaysia, Australia, New Zealand, you name it. And that's part of my preparation. What are all the assets doing? What's the pattern that I'm looking at? What day of the week is it? Is it Monday? Is it Friday? How have the prior 2 days been? This is part of my preparation for a trading day. That doesn't mean that it will necessarily hold true throughout the trading day, but at least it gives me an idea of the kind of sentiment that is going on in the market. And then I also look inwards. I take some time out to just quietly sit and contemplate what is it I want to do. Am I rested? Am I distracted? Am I cold? Not necessarily do I have a sniffle cold, but am I out of sync with the market? Have I been away from the screen for a while? And yesterday was actually my first day back after having been out of the market for about a week. And before that, I've been out of the market for 3 weeks. So I did consider myself a little bit cold. So one of the things that I noted yesterday when I was preparing was that really speculative assets like Bitcoin had a huge knockdown. Bitcoin had fallen from 41,000 down to around 35,000. Stock indices in Asia were mixed to weak, and there was no real news to drive the market lower. So sentiment for whatever reason was just negative. So, and the overnight market, which the futures and the DAX and the FTSE, they were displaying weakness as well. So I had a sense that I needed to be bearish the market. But my mental preparation is I rely on reading charts using absolutely no indicators whatsoever. And I'm very good at that most days. Because I am not distracted by moving averages, oscillators, MACD, RSI, stochastics, I am not swayed by sentiment in the sense of that something is overbought or oversold. I just read the market bar by bar. And that's what you get when you follow me in Telegram. But when I am cold like I was yesterday, I like to sit down and simply watch the charts for a few hours to just get a sense of the market, because to me speculation is about understanding what others are thinking. It's not necessarily what I'm thinking. It doesn't matter whether I'm bullish or bearish Bitcoin. If my views goes contrary to what everyone else is thinking, then I need to adjust myself. This game is not about being right on your opinion. This is about reading others and what they're thinking, what they're doing, and then jumping on board and capitalizing on it. It's nothing more, nothing less. So I need to ascertain who's scared, who's optimistic. And for me, when I am cold, the best way of doing that is to sit and just simply take it all in, just not feeling any pressure to trade whatsoever. And so that's exactly what I did. And yesterday I was making an educational comment on the DAX and how misleading it can be to sit and pay too much attention to what has happened during the night. So if you, for example, you look at this chart here, and then what I have done here is I have stripped away everything that happened from when the DAX closed on a Friday night to when it opened on Monday morning. Let me just show you that again, because I think it's quite relevant. This is with everything that's going on after the stock market closes in Germany, and this is without it. And to me, paying a lot of attention to what's going on during the night or in those thinly traded hours can be misleading. Not that they were so massively misleading, but some people would probably say, well, there's a inverse head and shoulder. We got a left shoulder here, we got a head here, and we got a right shoulder here. And, you know, pattern recognition is what it is. It's just our attempt to slightly get the markets on our side. But patterns generally only work about the, you thinking this is an inverse head and shoulder pattern? Yes, sure it is. I see it as well. But patterns generally only work about 60% of the time anyway. So that's where money management come in if we want to be successful traders. So what I did here is I simply stripped away what I thought was unnecessary information, and I was left with a market that had trended low on a Friday, and on a Monday, whatever had happened during the night, I simply discounted that, saying, well, where are we right now? And the thing that I noticed was that I had a low at the close on a Friday night, and that's pretty much where the market opened on a Monday morning as well. And we had a double top at around a crucial number, 14,000. I thought, I need to get short the DAX. Now, because I was a little bit rusty, I thought, I'm just going to take this trade for myself. So I made a note here, and some people are good at reading between the lines and saying, well, if I write something like this, then it's probably because I'm short the market myself. And sometimes when I don't announce a trade in Telegram, it's because either I am not keen on sharing it for whatever reason. Maybe I just feel that I want to have this trade for myself because it's highly speculative and I don't have a stop loss, or alternatively because I feel that perhaps the stop loss is too far away. So in this case here, I felt that I had actually gotten under the skin of the market again. The market had fallen, and it had fallen quite significantly throughout my waiting time, waiting for the US markets to open. So I thought that I'm going to announce a short position. I was already short myself at this point here, and I was making good money. And at that point, I was still short the market, and that annoys me, as I'll explain in a second. And I thought it's time to get the Telegram group short as well. And I saw this harmonic move here, the first move up in the morning had now matched this second move up here. So I thought this is a good entry point, 13,901 entry. Actually, I wanted slightly higher, but it happens. And with a very, very modest 20-point stop loss, considering that the market had already fallen 150 points from top to low, I thought that a 20-point stop loss is either going to make or break very quickly. And unfortunately, I was wrong. I entered the market short here and I got stopped out here. Yeah, sure, small loss compared to what I went before and what came after. The problem I have with this trade after the fact is that the low came just around the US open of the stock indices. And the DAX had 8 consecutive lower highs, lower lows on a 15-minute chart. Now that's very unusual. And so while my assessment that the markets were weak earlier and the day was correct, and selling short where I did was also correct, selling short here is perhaps not the best of ideas. Why? Well, because when you have 8 bars of 15 minutes duration each, where each bar gets longer and longer, you see how they grow in length? That is a sign of increased participation. And when no bars gets above prior bars high, that is also a sign of capitulation. And this bar here shouldn't be conceived as there's more weakness coming. Actually, the moment we begin to trade above this bar here on a 15-minute chart, I should have been on the long side, not the short side. So I read that pretty wrong. The loss was small for you, if you were following me in Telegram, but for me, it meant that I basically pissed away a lot of the profits that I had already accumulated on a very good trade. So the loss was small in Telegram sense, but I was hurting because I felt I had misread the market, and that I think that I don't mind losing money because I know that over time I will make money, but when I make a mistake, that annoys me. Yeah, I'm not a robot either, and it was my first day back, so I'm somewhat forgiving on myself, but nevertheless it stings a bit when you feel afterwards that you read something badly. There's often an element of divergence going on between stock indices. So often you'll see that tech stocks are hot and the other older stocks are not so hot. I call them the old generals of the Dow Jones Index, like the IBMs, the General Electrics of the world. They're the old generals. They're the has-been tech stocks. And then you got Facebook, Tesla, Apple, etc. These are the new tech stocks. And you often see that if one segment is up, the other one is down. So you often, not always, but you often see that if the Nasdaq is really hot, oftentimes it almost feels as if stock traders are focusing all their energy on the new stocks and they're sort of ignoring the old stocks. So when I noticed yesterday how weak Nasdaq was and how comparatively the Dow was performing better, I thought I need to get short the Nasdaq. And that's exactly what I did here. I shorted the Nasdaq just around here at 12,984. Had a stop loss at 13,015, which is just up here. Do you know what? It actually came half a point from my stop loss. At this point here, the market went my way and I was plus 40. So I moved my stop loss to break even, and I was quite certain that we were going to go down to the old lows. But the next two bars, the ones you're seeing here and here, completely changed this idea, and I got stopped out here. At this point here, I'd moved my stop loss to break even, as you would when you have plus 40 points. And, it happens. You have a big profit, you get stopped out for nothing. What can you do? You move on. So I decided that the reason why I wanted to be short Nasdaq was because of Tesla. Tesla had made a gap up on a Friday, and then it made a gap down. That's called an island reversal. And it made me quite bearish the Tesla stock, and it made me bearish Nasdaq as a whole. Why? Why am I saying that? Well, because when you look at the weightings in the Nasdaq, you'll see that Tesla is quite a heavy component. You see how that goes down 7%. So it's a good idea that when you have a specific segment, such as Apple or Microsoft, etc., that is being overtly strong or overtly weak, and you get a sense for, well, how is this going to affect the Nasdaq? And I felt that it was going to affect the Nasdaq adversely. And I was right, but I was wrong. So I shorted the Nasdaq once again, and I put a stop loss up here. And this time I was not so fortunate. I actually got stopped out. And I was away from the screen at the point, so I could not react to subsequent sell signals. I missed all of this. As I said, it was my son's birthday, so, you got to be a family man more than a stock trader. And it was upsetting. Yeah, I lost money. It happens. It was crap. I'm annoyed. Especially when I see what happens subsequently. So, for those of you who followed me yesterday, it might have come across as two losers on a break even, but I hope that now putting it into context, that you actually had you have an idea of what the hell I was doing and why I was doing what I was doing, and I hope that I can't take away the points lost. I will make them back, of course, but maybe it will give you a sense of what it was that I was thinking and the strategy behind it. So there you have it. A new day is beckoning. I would have normally done this last night, but because of birthday celebration, I decided just to do it this morning. So I better get back to it because the European markets are open. Thanks a lot for watching.